Are you navigating the complexities of unemployment benefits in Texas? It can honestly feel like a massive puzzle of rules and regulations. But hey, don't worry, you are in the exact right place. Welcome to this essential explainer where we're going to break down exactly how to navigate Texas unemployment benefits with absolute confidence. If you're currently receiving or even just applying for unemployment benefits in Texas, you need to learn how to correctly report your work and earnings. Doing this accurately ensures you stay compliant and, most importantly, secure your benefits. Getting this right is absolutely crucial, so let's jump right in. So here's our roadmap for today. We're going to cover 1. Navigating the Texas unemployment system, 2. The golden rules of reporting, 3. A step-by-step walkthrough of exactly how to do it, 4. Avoiding some common pitfalls, and finally, 5. Final checks and resources. All right, part 1, navigating Texas unemployment benefits. Let's get a handle on how this system actually works. First things first, what even are unemployment benefits? Basically, they're an employer-paid safety net providing temporary, partial income replacement when you lose a job or have your hours cut through no fault of your own. And the group running this whole show is the Texas Workforce Commission, or TWC for short. It's super important to understand the TWC because they are the agency setting the rules we absolutely have to follow. They look at your past wages, they calculate your benefits, and they rigorously enforce all the reporting rules. And listen, we really need to get this right. Accuracy is literally everything here. Simple misunderstandings about how or when to report your income can lead to frozen benefits, massive overpayment bills, or, no joke, actual fraud investigations. But take a deep breath. We're going to show you exactly how to stay safe and keep your claim completely secure. Moving on to part 2, the rules of reporting. It's time to master the golden rules. Okay, here is the biggest rule of the whole shebang, the accrual rule. You absolutely must report your wages when you earn them, not when you get paid. If you physically put in the hours during week 1, but your boss doesn't actually hand you a check until week 2, you still have to report those earnings in week 1. On top of that, the TWC uses a strict Sunday through Saturday work week for reporting, regardless of what weird pay period your company might use. People trip up on this all the time, so definitely lock that rule into your memory. Now, let's talk math. It's actually really straightforward because of the rounding down rule. When you calculate your gross earnings, which is just your hours worked multiplied by your hourly rate before any taxes come out, you drop the cents. Just round down to the nearest whole dollar. So if you earned exactly $100.99, you report exactly $100. 0 cents. Easy, right? Here's a twist that surprises a lot of folks, the 25% rule. You might be wondering, if I work a part-time job, do I just lose my unemployment completely? Not necessarily. You can actually earn up to 125% of your weekly benefit amount and still get a partial payment. The TWC just takes your weekly benefit amount, multiplies it by 1.25, and then subtracts whatever part-time earnings you made to figure out your partial benefit for that week. It's basically designed to encourage you to take part-time work without instantly losing your safety net. All right, part 3, step-by-step earnings reporting. Let's actually put all this theory into practice. When your scheduled filing day rolls around, which is usually sometime in a Sunday through Wednesday window, you'll follow these exact steps. First, log into the TWC's online portal, which is called Unemployment Benefit Services, or UBS. Second, click on Payment Request. Third, the system will ask if you worked. If you did, enter the exact number of hours you logged during that Sunday to Saturday week. And fourth, punch in your gross earnings, completely dropping the cents like we talked about. And please keep in mind, there are basically no exceptions to what the state considers work. Every single type of paid service has to be reported. We're talking part-time jobs, temp assignments, freelance gigs like driving for a rideshare app, sales commissions, restaurant tips, and even self-employment net profits. Basically, if you do a service and get compensated for it, it goes on your payment request. Which brings us to part 4, avoiding common reporting pitfalls. We want to keep that claim secure. Let's map out the biggest traps people fall into so you can avoid audits. We already mentioned waiting for your paycheck and using the wrong pay period. Remember, always Sunday to Saturday. But hiding side jobs, that's a huge one. And honestly, the state will find out. And here's a massive trap a lot of people miss, self-employment. Even if you hustle on your own business all week but generate 0 profit or actually take a loss, you still have to report your exact hours worked and just enter $0 in earnings. So why am I stressing this so much? Well, this quote right from the TWC really paints the picture on overpayments. If you're overpaid because of a reporting error, you have to pay it back, period.
There's no statute of limitations on debts owed to the state, and there are no hardship exceptions. And it gets worse. If the TWC decides you misreported intentionally, they slap a 15% penalty right on top of what you owe. Tracking your hours accurately is just absolutely non-negotiable.
Honestly, the absolute best way to protect yourself is incredibly simple. Keep a daily work log. Do not rely on your memory 2 weeks later when you sit down at your computer. Write down your hours and calculate your gross earnings at the end of every single shift. By doing this, you completely eliminate the guesswork, prevent accidental fraud, and make your biweekly reporting a total breeze. Okay, we made it to part 5, final checks and resources. Let's make sure you can hit submit with total confidence. Before you ever click that submit button, run through a quick mental checklist. Are your hours strictly for a Sunday through Saturday week? Are your earnings gross, meaning before any taxes were touched? Did you drop the cents? And did you include every single side hustle? You've got to be sure because the TWC's quarterly wage database automatically cross-matches your reported earnings with your employer's tax reports. If things don't match up, it instantly flags your account. Now look, we're all human. If you do make an honest mistake, don't panic. The absolute worst thing you can do is just ignore it. Call the telecenter right away at 800-939-6631 so they can correct it before it blows up into a bigger issue. You can also use their automated teleserve system or the online UBS portal to securely manage your claim, check messages, and track your status. Before we wrap up, I need to share this. This explainer is for informational purposes only and does not constitute legal advice. For specific legal questions and personal advice, please consult with a legal expert or contact the Texas Workforce Commission directly. I really hope this explainer has empowered you to navigate the system with confidence. If you found this helpful, be sure to like, comment, and subscribe for more updates. So, I'll leave you with this. What steps will you take right now to keep your daily work records perfectly organized?